Hi, good morning. Today is Friday, and I have some time on hand. I thought maybe I do a top-down analysis on this pound dollar, and hopefully you can learn something from this short video. Now, I start from the weekly time frame. Don't mind if you take a look at the Monday first. Okay, Monday we are down, pull back, and we break this low. Look at this candle, break the low, and it pull back and close above the low, and after which we see the price went up all the way to test this high but fail, and now we see the price coming down. All right, so this is what I can see from the money time frame. Okay, so as an intraday trader, we don't really put so much of significance on the higher time frame like monthly or weekly, because we are looking to trade intraday, right? In today, what kind of opportunity we can trade. Okay, unless you are swing trader, then you have to pay attention to the higher time frame like the weekly time frame, monthly time frame, or daily time frame, right? But as an intraday trader, we don't really have to. Now I go down to the weekly. Now the reason I come why on one hand I say that, well, we don't have to care about the higher time frame, especially when we are intraday trader, but yet we still start from the higher time frame. The reason being that we want to know, have a feel where is the market doing in the higher time frame, so we don't want to get caught when we just focus on lower time frame, right? So when I go to the weekly time frame, once again we can see not much of different from the money time frame, right? You can see the price actually was in a downtrend. Was it in a downtrend? Yes. Okay, you can see the price was in the downtrend, and it break this low. Break this low, but it immediately closed back up, right? So this is exactly what we see on the money time frame, right? And after that, you can see the price actually make a high, break this high, break this lower high, make a high. So we can see there's a shift in the market behavior. Okay, but overall, in the higher time frame, we can see that this is still a bearish, right? We can potentially see something like that playing out. Okay, let me remove all this circle because it's blocking my view. All right, so and here pull back, price come here, pull back. So where is the next likely movement? It's likely to be low, right? And take out this low. So this is what we see on a higher time frame, right? We are bearish, okay, based on the weekly time frame. But then again, like I said, we are not so concerned about the weekly because we are trading on the intraday. So now let's zoom in to daily and see what happened to the daily. Well, on this daily, you can see that we have a low here. We move higher and make a high that took out this high, right? So we know that on this daily time frame, at least we can expect the price to move higher and pull back, right? And pull back and do this. Next level, like this. Okay, so this is on the daily time frame, but weekly time frame we expect the price to be bearish. So what it might happen is it might just pull back like this area and then go down. That is a possibility, right? Or it can go even lower first and go up, then go down. So these are the possibility that market can move. Now, why I say the price can potentially move lower? Now, if we take a look at this, if we pull the Fibonacci from this low to this high, no, again, I'm not using Fibonacci tools for trading, right? I just basically to know where is the location. You can see that clearly the current location is above 50%, right? Above 50%. And usually when we have such a higher time frame, low to high, we can clearly also see that this is actually a retracement. This leg down is actually a retracement onto this leg, right? So the retracement usually which we can easily expect the price to retrace to about 50%, which means that price can potentially go even lower before go higher and then go lower. Okay, so that's what I can get from this three higher time frame, right? Daily being the daily, monthly and weekly and daily, right? So from the daily, I can expect the price can make potentially go even lower. Okay, and after all, the higher time frame is bearish. But before go lower, we are not discounting that the price might move up first, right? Before move lower. So these are the possibility that we have to know in our mind, right? So now I go to the 4-hourly. So in the 4-hourly, what do we see? Well, clearly in the 4-hourly, we are in a bearish trend, right? You can see that with this down, down, down. Okay, 4-hourly, we are bearish. So after the price make a high, we have a high with a low, with a lower high, with a lower low. What is the next likely movement? Well, it's going to move up. It may go down, right? So that's how we can see from the 4-hourly time frame. We can expect a price to move higher before move lower. Okay, let me remove this. Now 4 hours. Let's zoom in a little bit more. We are bearish, right? Clearly, we are bearish. So now we have a lower high, lower low, low high, low. You can see now if we zoom in a bit nearer into this area, because we are looking for trade now, right? Today, we can see that this is the last lower high. The price break this low, we make a lower low. Okay, and what do we see here? Price retrace up. See this wick here? This wick take out this high. So we have break of structure, right? Structure break. And price retrace lower. So this tells me that price want to go higher, right? So this actually go with what I mentioned, right? We expect price to go lower, but before it go lower, we can expect the price to actually move higher, because if we take a look at this swing high to this swing low, you pull a fib, the 50% of this entire swing is about here. So we can expect this. You can see that this is a down move, right? This is a down move, right? We can expect the price to retrace, or even if we pull the fib from here, the 50% is also here. So in other words, we can expect the price to move higher, touch a 50% area before move lower. Okay, so my bias for the 4-hour time frame is move higher. Okay, now the question right now is, will the price move lower first before move higher, right? So we have to go down to lower time frame, to 1-hour time frame. Okay, and that's what we see. Okay, let me remove some of this line, otherwise it's very messy. I don't know how to remove all at one go, but it's very time consuming to remove. Okay, anyway, we are looking at 1-hour time frame right now. Okay, like I said again, we expect the price to move higher, then move lower. Now the question is, will the price today move lower first? Right, because we can see that there are a lot of liquidity. So by the way, we will use this dollar sign to represent liquidity. There are a lot of liquidity below. You can see I just draw a trend line connecting all these swing low. So these are not happen coincident. They happen for a reason, right? Why? Now you might be thinking, why the smart money is generating or creating this liquidity below all these swing low? Reason is because in the future, when they want to come down lower and grab all this liquidity, that's why I say that the longer time frame, I expect the price to go lower. But the question is whether today the price will come all the way down here, grab the liquidity before go higher. Because my expectation today is the price likely to go higher, right? Now, whether the price go higher or not, let's examine this area. Okay, this is the last push down. You can see that this push down was the last push down, right? And the price push down, you see what happened after that? The price moved higher, make a high that took out this high. All right, we have a break of structure point there, structure high, and then what happened after that? We see the price start pulling back. All right, it pulled back to get some liquidity fill, right? And then what happened? What happened after that? Well, it moved higher. Take out the next high, make a higher high. And what did the price do? The price come back one more time to rebalance and unlock all this trap order. You can see it, these are all trap order, right? So price move back down again, right? So price move lower, do stop hunting, then move up, break the structure, price remove, retrace lower, unlock the trap order, then move up again one more time, break the structure, move back down again, unlock the trap order. So now after the price move down lower with this long wick, unlock the trap order, and what did the price do? The price move higher, and now it break this high. What did the price do? The price moved back down again, yes, last night, to unlock this trap order. So basically what we can see is all this trap order has been unlocked. Now the only order that not unlocked is this one. This is the last trap order. Intention is to take out all these stop loss, right? So that all this sell order can fit the buy order, so it can push the price higher, right? So this have two functions. This move down has two functions. One is to get accumulating more and get their buy order fill, at the same time unlock this trap order. So this is the latest trap order not yet unlocked. So I think that today, with the price move all the way down, here to get all this before move higher, I won't say that it will definitely not moving, no chance you move low. I won't say that, right? But the odds of the price moving lower before move higher, I think very low. The reason is, if the bias is to move higher today, if the institution intention is to move the price higher today, because the price need to rebalancing, right, before it move lower, right? So if the price is intention is to move higher, it will be very inefficient for the bank to move the price down lower to grab all this liquidity and then move the price up. Very inefficient, right? So I think that the most it will do is it just move lower. You can see that we have a gap here, right? So in this gap, I use this sign. I'm not sure if you have a better this indicate that there is a gap, right? There's a gap here, okay, and there's a gap there, but of course this gap already get filled. Okay, it filled by this. Okay, so in future when you see my chart have this, it means there's a gap there, right? You see a dollar sign, it means there's a stop loss, there's liquidity there. All right, so when you see the price have a horizontal line like this without anything, means it's a break of structure point. Okay, so now if I go down to 30 minutes right now to have a better picture, right? You can see that today I'm expecting the price to actually move lower. You can see these are all the liquidity. Below all this low, and we have a gap here. So, and we have this order, this trap order not yet unlocked, right? So I'm expecting the price to actually move lower, achieve these two, at the same time unlock this trap order, and then move up. Okay, so now let's go up to 1 hour time frame, 4 hour time frame. Okay, and then move up to, okay, so that's what I'm thinking, right? I'm waiting for the price to move lower today and then move up. Okay, that's how I do my top-down analysis. Okay, I hope this helped. And then if any question, you can always post in the group, and then I'll answer you. Okay,